Ladies and gentlemen of the crypto space, we're live on a Monday, January 10th at 11:32 a.m. What's going on in the markets? Clearly, this is tree shaking season, and people have no idea what the heck's going on. So we got to zoom out. You got to look at the macro environment. You got to understand some of the macro theories and ideologies that have been presented to get a sense of what the heck is going on. We have historic norms that are being contradicted. Typically, when the market is about to sell off, where does risk go? Risk goes to seek safety in the bond environment. Bonds are selling off. What the heck does that mean? That probably means the bonds are the source of truth. And if bonds are selling off, the equities are the head fake. So we're going to pop it over to the main screen. We're going to dig right into the data and really get a sense of what's going on. So this is the S&P futures. S&P futures tried to push for a bearish engulfing on the monthly, but there's 21 days left in the month. Let's zoom into the weekly. Zoom in. There you go. So we're seeing resistance, obviously, but we're not seeing lower lows. In fact, we're seeing higher lows. This is not necessarily a pattern formation that indicates directionality as of yet. We do see a ceiling, so clearly we had a failed breakout above the 4701 region, and it has pushed back down, although printing higher lows. This is on the weekly, 4 days left. Let's drop into the daily. This was merely a 100 SMA mean regression. So thus far, clearly we have not tested the 200 SMA, the 200 EMA, which is the two moving averages below. We're at the 100 SMA, and we're finding a fair amount of wicking going on. 5 hours left in the day. This is quite interesting to see. Obviously, you need new higher highs. You want to see a fair amount of breadth to the upside to, indicate that there's capital to actually enter the space, driving the market in an appreciative direction. Definitely want to see this 4701 take it out. 4900 would be a nice upside to indicate that there's strength left in the market. I mean, if you look at the bond market, either you have a breakdown of historic norms and bonds are correlating with risk assets, but this chart is bonds are selling, and bonds are selling to the point where they're hitting a moving average resistance to the upside, or at least yields in that regard. So bonds are selling off pretty aggressively, especially considering the pattern formation. Clearly, you have somewhat of a decent inverse head and shoulders. Clearly, the neckline is quite slanted, but combined with the cup and handle formation and the resistance, you're basically still in a potential breakout situation. Bonds selling off, if it's historic norms, you're talking about um, bullish sentiment. Inflation, bonds are useless, negative real rates. What the hell are you holding bonds if negative real rates and inflation are going to persist for a long period of time? You get out of bonds and you go into assets because you're seeking yield. You're seeking a return on your capital to keep up with inflation. So bonds are selling off. Let's zoom into the weekly and take a peek. We're right at the 200 SMA in the weekly, which coincides, what was that, the 50 SMA? So so it has to get above the 200 SMA and the 50 SMA. 200 SMA in the weekly, 50 SMA in the monthly. Thus far, seems to be a little bit of support on the 10 SMA. I get my colors. That's the 10 SMA. The 10 SMA on the monthly. So we'll see how this plays out. But thus far, either there's a breakdown of historic correlation where equity sell off, or like a ceiling on the equities market. And being that markets are forward looking, if enough people thought that the markets are going to roll over and there's a strong ceiling, there'd be a rush to the bond market. And that's exactly what happened in March 2020. This was the bond buying spree, which drove rates basically down to useless. And the historic trend, it's directionally yields going down. So when you see the breakout to the upside, you're looking for convulsions in the market when yields skyrocket too high. October 18th. So this was August 19th. So this region right here is the September 2019 repo crisis. Bonds sold off. Interesting. Bonds sold off until it reached the 10 SMA on the monthly, and then the entire market capitulated. and just bought bonds, bought, hand over fist. So it's in a very precarious situation considering what has occurred in the last two years or so since September 2019. So bonds hit the 10 SMA on the monthly, and that just the rates, the system couldn't take the rate, and it just capitulated downwards. So now we're at a point where there was a breakout above the 10 SMA. Previous resistance flipped support, and it bounced right off the 10 SMA and pushed up to the 50 SMA on the monthly. So this is a bit of a precarious situation for macro financials. The last time the 10-year hit 1.93, let's say 2%. Let's not say 2%. Let's say 1.93%. The system totally convulsed. And that was a short while ago. So now this is a heck of a candle pushing into resistance. It's not like when bonds sold off in March of this year, we pushed into resistance. It was a failure to the upside, and back down to the downside, finding support, not a lower low. And now it's pushing upwards. So this is a precarious situation. We could easily see convulsions in the market. Let's go back to the equity indexes for a second. But thus far, we don't. Thus far, we see support on the 100 SMA, nice wicking formation that looks very similar to December 20th of last year. Frankly, it looks similar to even to December 3rd. So December, we saw moving average mean regressions. We saw some bearishness where it tried to push below the 100 SMA, and that was a failure, obviously, with the higher lows. And eventually support held. So this is very interesting. Could easily be just the bond market being a source of truth. The bonds are calling bullshit on people potentially thinking that this is an equities risk-off scenario. So sure, this looks toppy. Sure, this looks like a ceiling. Sure, this looks like a breakout, a failed breakout with resistance, previous resistance holding on the daily chart, as you can see here by these three candle wicks, or especially the candle body closes being below a previous resistance that failed 1, 2, 3 times, and it was a failed breakout. So bonds are calling bullshit. That's what the market's telling us. We'll get into the crypto charts, obviously. Clearly, we have a sell-off going on across the broad crypto space, and we'll dig in. Let's hit a couple of comments. 41 people in the stream, 8 likes. We can do better than that. First and foremost, we got to get that out of the way. Dan Goldberg's in the house, wants to talk about Keeper and VE 3x3. So there's two assets that have been outperforming during this bearish period we've had over the last 1-2 weeks, and that's predominantly FXS and KP3R. So what do we know? We know KP3R is going VE 3x3. It was stated by Andre in some Discord talk. We know the new asset is launching for the market making platform, the automated market maker, or the stable swap protocol, whatever folks want to define it as. I think they probably call it a stable swap protocol. And it looks like the protocol tokens for that, or the tokens for that protocol, are going to be distributed to the top TVL projects on Phantom. And I think this is by far the most fair distribution for a platform token I've ever seen. Frankly, every characteristic, every attribute of what has been presented thus far by Andre and team is probably the most unique tokenomics and protocol launch that we've ever seen in the crypto space. This is some seriously uh, iterative shit. Iterative meaning it's built upon the protocol implementations that we've had thus far in the crypto space, and this is just an evolution of what has been successful. VE obviously referring to protocol fee distribution denominated in whatever asset is being traded. At least that's what was discussed with regard to the protocol. But it looks like protocols like Keeper will be isolating platform revenue from the platform token itself. So you have your asset and then you have your yield aside. And the odds are probably Spell is going to head in this direction as well. We've heard talks about that on occasion, or at least that's something we want to see. And that's something I talk about often. If we have revenue that's completely separate and apart, that's independent from the protocol token, we're able to look at it not necessarily as a buy low, sell high. So you don't have to liquidate Spell necessarily if you're getting MIM as revenue. If you're looking at the Spell in terms of how much Spell do you have to generate a particular amount of revenue. So now you're basically looking at it from a cost benefit analysis, and then you're able to analyze other protocols to see which is able to produce the best ROI. So clearly, you're getting about 50% return or so on CVX CRV, but only a fraction of that is denominated in 3CRV, which is curve protocol revenue. The incentives are meaningful, and it is a functional protocol. It's extremely lucrative. It's very profitable. All the ways we've talked about it over the past years at this point. But clearly, Andre thinks things could be different. And what he's talked about with Ouroboros and having revenue that's completely isolated from the protocol tokens, that's an extraordinary iteration of something that I've talked about in excess. Looking at these things as a business, looking at these things with regard to how much asset do you need to hold in order to have a particular quantity of revenue. And that isolation, that fine line between the protocol token and the revenue stream, I think that is refreshing to see what he came up with in the introductory technical documentation of what they've been building. Um, I've been waiting for this. I've been waiting for a true dividend-bearing asset in the crypto space where you could own a piece of infrastructure that is a claim to a portion of the platform transaction fees, and that's just extraordinary and exciting to see. So whether that translates into taking an increased position in Keeper or the new asset, I don't know, Dan. Still on the first comment, obviously, guys, but I look forward to seeing how it plays out. This is a period of time where you probably want a fair amount of optionality, which basically means a stablecoin position, so you can make various decisions depending on market conditions. We'll pop over to the other charts and we'll see what's going on. Let's take a look at Curve first. Curve is holding on the weekly TWAP, which was nice. It pushed fair amount below it, but thus far it's wicking above. This is a hammer, so hammers are indicative of trend reversal. There's 6 days left in the weekly candle, so this is telling us jack shit at this point. On the daily candle, we did hold above the 100 SMA. We were below the 50 SMA, and a decent amount below the TWAP and the 10 SMA above. We're above the first bar of the fork. Was that the third bar? No, that's the first bar of the fork. That's nice to see. So a daily close above the 100 SMA will be refreshing. Does give us a little bit of uncertainty. Is it going to push below the 100 SMA or break back above the 50 SMA just above? Bear in mind, this is a decent candle to see at the bottom. It's a hammer. Hammer is probably indicative of trend reversal. So it pushed down, but there was enough buying pressure for the close to be significantly higher. So that means people entered at a relatively critical price point with regard to the moving average. So there's an indication here that we might be in for a trend reversal. We're putting in a higher low, which is nice to see. A previous support that held over the course of 1, 2, 3, 4, 5, 6 days below the 100 SMA back in December. We're printing higher highs. I mean, this is a bit of a channel. If we drew the channel from there and then the channel down below, but that is also what's shown by the fork. That's a little bit further out than the peak that we had on October 27th. Be nice to see this first bar of the fork hold. It'd be nice to see the 100 SMA hold. I don't mind if it stays below the 50 SMA for a little bit of time, but I'd like to see that 100 SMA hold and eventually break above the 50 SMA on the daily. So eyes on. I mean, look at the RSI down below. The RSI is getting pretty low. What is it down at? It's down at about 42, and the lowest really that the RSI has gone in no, we did get. We had our Bitcoin capitulation, our derivatives cascade. No, that was earlier. So here was our derivatives cascade back in May 17th. Let's take a look at the daily. Yeah, that was right about there. So the only period that RSI got lower than the most previous low was back in December, but it was back during the summer. May, June, July, we got down towards the 20 mark. So it's food for thought. I mean, what's that? The 30 mark. Got down towards the 30 mark. So we'll see. There's some nice distance between the signal and where we are in the RSI. Um, you don't even know what direction the market's going to head, but what you look for is indications that there's support. You look for confluence, and we are printing a higher high. The last mean regression we had down to the 200 SMA was back in December 3rd. So I'm optimistic about this chart. It's folks are probably thinking, do I exit? You never exit a whole position. You know the directionality in the market is up. We're going to have ridiculous volatility. We were up at $6.80, and we're down at $4.30. It's almost a 50% haircut, frankly, almost. And and that's what we know. We know this is what happens in the crypto space. So that's why the tokenomics from Andre are quite refreshing. These tokenomics isolating revenue from the protocol token are highly encouraging of appreciation because there's a fight for more of the protocol token to generate a particular quantity of revenue. And there's no point in liquidating the protocol token because it generates money, it pays you. And folks are very easy to liquidate assets that pay shit. So we have a highly selective quantity of assets we look at the crypto space for that are going to exhibit the most strength possible. And Frax happens to be one of the strongest assets in the entire crypto space, down barely 0.25% on the daily. We had our previous resistance at 27.33, and it pushed above it, and it hasn't come down to test it at all since the entire start of the year. So we're 10 days into the year, and we had a massive wick up to the upside at 43. Looks like DPI and is causing a fair amount of participation. But in order to get access to DPI, you either need permanently locked VEFXS, which removes FXS from the market, or you need VEFXS, which basically removes FXS from the market as well. So it's not going to get released. And the platform revenue that Frax generates on $1.8 billion is constantly being used to mint more Frax, and that Frax is used to buy FXS on the open market and burn the FXS. So it's a deflationary protocol tokenomics. So Frax is literally constantly buying FXS. But the interesting thing is, it's not that it's directly buying it from platform revenue. They generate more Frax. So the Frax is still going into the open market. It's more and more Frax, and as more Frax gets minted, it's used to reduce the FXS supply. So there's basically a constant buy pressure on FXS, and this is all exhibited very well in the price action. As Frax demand grows, there's going to be less and less FXS available. Big entry, 251K. It's not huge, but we're getting there. We'll start seeing in the coming years 2 million, 2 million, 2 million. It'll go about tenfold in the next couple of years. Let's take a look at Keeper for a second. Pretty lofty price action, barely minus 5.72% on the 24-hour. This is clearly a flag type pattern. This is very flaggy. Sushi swap, so it only has history back to August. I don't remember when the token was launched, but point being, this chart is just basically straight up. And considering the bearishness in the market, there's lower highs and higher lows. So clearly, this chart exhibits strength. We did take a position. I did take a position in Spell in Sushi shortly ago. It's nice to see it find support on this bottom green line. I was worried it was going to push below, but this is basically a support that if it holds, that's nice. That means this was a failed breakdown period on the weekly 1, 2, 3, 4 weeks where it went below that bottom green line. It was a failed breakdown, and we also had a failed breakout. So we see price action congestion basically between $8.50 and $6.74. So this is a region where it's going to try and figure out the directionality of the market. Clearly, the macro trend is bearish. But we'll see. A massive buy order went in on October 11th, and clearly you got the whole um, governance shift with regard to Daniel taking over as lead visionary, and we know what Andre's working on with Phantom stable swaps, and we know you got Sushi Trident that's in the works, and there's just a huge amount of development that's going to occur in 2022 that's going to push the market in all sorts of directions. Clearly, the macro financials could be pushing depreciation in the crypto space, but you got massive, massive technological achievements that are going to occur in 2022 that are going to be price appreciative no matter the macro market conditions. So it's going to be a fight between macro market conditions and technological deliveries. Um, and that'll probably result in horizontal price action, extremely volatile horizontal price action, but volatile price action nonetheless. And then when obviously the macro market just decides to go bullish, the crypto space goes apeshit compared to the equities markets. So that's where you get your outperformance. So in my opinion, I'd expect horizontal price action for a good part of the coming future, depending on macro market conditions. We're going to see some serious technological offerings. I'm really looking forward to see how Andre's new stable swap protocol behaves. I'm going to probably clamor to acquire whatever VE token supply is available for the protocol. Tempted to edge into Keeper a little bit, but otherwise the rest of the portfolio has already been adjusted. I trimmed the losers, I added to the winners, I leaned significantly into FXS. I mean, literally the chart just screams bullishness. And Curve shows support and strength, and basically it's a money printer. It's not the evolved tokenomics, but it's legacy tokenomics that was augmented by convex, and it achieved the status it achieved because of synergy. And that's not to the discredit of what they initially wanted to create when Curve created their monetary policy, but it is what has evolved. And it's evolved into basically an MMT money producer, as I would describe it. Just creates money. Frankly, you're not going to get a protocol launched, a new token launched, and you're not going to get critical mass liquidity without a gauge. A gauge is basically a gatekeeper. It just encourages so much LP participation that it sucks circulating supply out of the market. So guess what gauge is about to pass, by the way. So when a gauge is applied, the incentive causes significant circulating supply disruption. Now I want to go home. I want to go to the Dow, go over to the Dow. I think there's one day left on the vote. I voted yes, obviously. I wish the Frax UST, tried to push through a vote, which failed, unfortunately, but this is going to go through. Spell ETH, the V2 pool is going to get a gauge. 2 days left, 2 hours. And this is going to suck Spell out of circulating supply. And had no better time to have a bullish catalyst. The chart doesn't look bad at all. In fact, it looks like a triangular compression as I've drawn here, and you're still above the bottom bar of the fork. But the volatility is there. The run up on the price action was just so extreme that you could have an 85% retrace, and you're like, okay, all right, it is what it is. I mean, the asset's up 16,000% since July-ish, give or take. That's just an extraordinary appreciation. So what we do if you have an 85% retrace, if you were a market actor that bought during this period? There was a huge amount of spell available for months. May, and then it didn't start taking off until September, May, June, July, August, September. You solid 4 months to get a position at the ridiculously cheap price with a little bit of foresight of where the market would head. So clearly had this massive, massive irrational exuberance driving the price sky high, an 85% retrace, a nice rebound. You could have a solid push down. I mean, if this was an ABC correction, you could push down. You're not going to push down below zero, so you're not going to have, like a measured move in this instance. It doesn't work like that. You couldn't get down that low. This is a massive depreciation cycle over 1, 2, 3, 4, 5 weeks. But it'd be nice to see support on the first bar of the fork. Clearly, you're going to probably find support on the trend formation. That's just dirt cheap price, zero point 0.8, zero point 0.9 cents. If we zoom into the daily, let's see if there's any. Look, you'll probably see support, meaningful support on the first bar of the fork. You got the 200 SMA and what is this gold line on this chart? It's a 200 SMA and the white line's a 200 EMA. So you got double 200 moving average support towards the bottom bar of the fork. We failed to hold this trend formation that I drew. We could delete that at this point. Albeit we're coming off a double bottom on the daily, which is nice to see. You push up and you break above. What's my color scheme? That's a 50 SMA with the 10 SMA above in red. So if you push above the 50 SMA and there we push above the 10 SMA, you know, you're going to see nice support. You got a lot of moving average support. You got the TWAP up here with the red shaded region. If you push above that, you're into the first bar of the fork, and then you got trend resistance up above. You break that, and it's off to the races again with an invalidation of the ABC corrected pattern, and it doesn't give a shit how low it goes. The ABC correction pattern's not going to go much lower because there isn't much lower to go, and that's just the bottom line. Oh my God, was this all a question answer for Dan? Boy, do I digress, and I digress horribly. But let's go through some comments, say hello to some folks. 72 people in the stream, 32 likes. We can do better. David's in the house, always a pleasure. I hope you're buying, if doing anything. Yeah, I got optionality. I got a fair amount of optionality on the table. Um, I got 5%, 5.4% optionality right now, with probably another 2% worth of debt I was able to take out on SPAL, which is very rare, but when it's available, it's dirt cheap at 4.5% per year. So what the hell? So I probably got about 0.6, 0.7% optionality, and you know, I really want to see what happens when Andre's protocol gets released, and and if there's any buying opportunities available. Otherwise, I do get tempted to edge into keeper, albeit I don't necessarily feel the need to. Feel quite strongly about Frax and the DPI airdrop. It's not like it's a sell the news event because you literally have to have VEFXS or CVX FXS to get the drops. You're locked. You're completely locked. So only market participants that have conviction in the protocol are purchasing. And this is extraordinary strength. This is extraordinary price action strength considering the macro market conditions. Absolutely incredible. It's not even breaching the guppies on the 4 hour. Let's go to the 1 hour. All right, it breached the guppies on the 1 hour. But this is such strength compared to what's going on in the charts on the other assets. I mean, this breached basically everything and pushed down to the 100 SMA and the daily. Let's take a look at CVX. Everything's getting hammered, but it's not even below the TWAP on the weekly. So there's some nice strength here. Clearly, Tetra really sold at the top. Rarely sell at the top. Few. So that boy is just extraordinary and uh, just big. All he could possibly deserve is props for the capital that he's earned and for the control and power that he has in the crypto space. It's downright extraordinary. And if he stays humble, that's refreshing. It's easy to get arrogant with the amount of power that he's acquiring, but it seems decent thus far. You know, I'm not judgmental, but we'll see. Convex barely getting below the guppies on the daily, nowhere near the 100 SMA yet. 100 SMA would be a heck of a there's a heck of a price action zone right by the 100 SMA because you have a previous resistance here, failed breakout, failed breakout, failed breakout, failed breakout, breakout, and now we've seen a fair amount of price action over many days above moving average supports. So dare we get down to the 100 SMA? Gut says we have a hold on the 100 SMA, so price target entry. If someone's interested in an entry, could start edging in probably around 27.97, about $30, give or take. It would take a fair amount to push below that price point, given past price action resistance and a breakout significantly above it and support thus far meaningfully. Um, And there we find support here. You push down here, you find support. You got basically one heck of a resistance flip support because this is a lot of days. Let's go into the weekly. We'll take a peek. So you're above the TWAP. That the 30 buck region is above the TWAP. Well, the TWAP's above the $30 region. So highly inclined to see support around the TWAP about 30 bucks and a little bit lower to $28. Um, Got me some CVX and Spell today. I would be cautious, optimistically cautious in a market like this. As I always say, entries are incredibly hard and ridiculous, and there's absolutely no reason the price action can't keep going down, which is why my eyes are on basically the 10-year bonds and S&P futures. Clearly, S&P futures or equity markets, risk assets are correlated to the crypto space. That's just what we see. Sometimes we see correlation, sometimes we see inverse correlation, but thus far the prevailing trend is correlation. And thus far we're seeing support on the 100 SMA, which is basically not big shit compared to what we've seen over the last couple months. We got a mean regression on our hands, and you know it's more likely than less that bonds are calling bullshit on the equities market sell off. Because if the equities market was going to sell off, we'd see people piling into bonds and we see rates get absolutely crushed, which is exactly what we saw in March of 2020. And we're not seeing that. So as this breaks up, it's more likely than less bonds are calling bullshit on the equities market depreciation, like a capitulation, like people just, I'm done, I'm exiting, institutions exit, this thing does a fat mean regression to like, oh my goodness, the guppies on the weekly. Let's zoom out to the monthly. In the cards, like if there's a massive market capitulation, look, you'd see a mean regression to the 100 SMA in the monthly. What happened in March of 2020? It was literally just a mean regression to the 100 SMA in the monthly. That's all it was. That's it. It smacked right. You can't make this shit up. You can't make it up. It literally smacked right into the 100 SMA in the monthly and bounced like a rocket ship on the monthly. You can't make it up. We are so far deviated from the moving average. It's extraordinary to see. It's just bubblicious in all regards. By definition, a bubble is anything that deviates from the moving average, where a mean regression would be devastating to price action. At least that's the way I define a bubble. Quantified's in the house. Morning cap wondering if V3x3 will be available to CVX CRV holders. No, it will not. It's an equal weight to well, it's a TVL-based distribution on Phantom, and it's a protocol-only distribution. So the protocols individually in the top 20 TVL on Phantom are going to have discretion on what to do with the assets. They're likely going to use it as pool incentives. That would make the most sense because that's going to drive liquidity on Phantom. And that could actually, this protocol from Andre could actually be a massive, massive catalyst for price action appreciation across the board on the Phantom protocol. Could see significant circulating supply disruption as assets are piled into LP positions to take part in the incentive. And there's going to be such a restricted supply of these VE assets, that they could be highly price appreciative. And to top it all off, they take a piece of Ohm tokenomics where the more locked, less emissions. So that's highly price appreciative because there's just circulating supply restriction. So you got less emissions with more lock. So as more and more people lock, there's less and less available for people to buy. So that's extremely price appreciative. The tokenomics for what he came up with could be a massive, massive boon, a massive, massive catalyst for the Phantom network across the board, especially considering the protocol drop. It's not an airdrop, it's a protocol airdrop. So this got novel and iterative written all over it. Liv W's in the house, always a pleasure. I did enjoy the weekend. Too nice with family. We had paella. Oh, good stuff. Good stuff. James, good morning. David, hey, dude. Robert, down bad. No, man, markets look decent. Just watch the risk curve, watch diversification. You want to cut the losers, you want to concentrate in the winners. I always say that depreciative markets reveal the gems. They reveal the assets that have the power and the support and the market actors that you want to be involved with. You don't want to be involved with market actors that are trivial, that are novice, that are very fearful or going to sell. They want market actors that are buying something that has meaning, and these types of market conditions are what reveal the true winners. That's a big deal. That's a big deal. Cut the losers, concentrate on the winners, keep optionality available, which is a stablecoin cut, so that you can make choices as the market stabilizes and you begin to see the directionality of the market. Barry's in the house. A pleasure. Patrick Monday, Bloody Monday. Yeah, it's pretty bad. It's not that bad. It's not that bad. What do I got today? We're down 5% today in the portfolio. 6.8%. Ooh, all right, fine. Maybe it is that bad. But it's a nice bounce back. I think it was down like 12% at one point, so it's down 6%. So all right. I'm not complaining. Definitely not that bad. Killis, good morning. Income still incoming, Brian, and that's the deal. That's the deal. So you can think about carving out a position of an income producing asset, but that's what produces the income. And then you got all that capital gains from when you bought Curve down at $1. You got all those capital gains to pay, where you could get 50% on all those unrealized capital gains. Woo! I don't think it's really tough choices at all. It might seem tough. It's not that tough. Chilled and baked. Markets are scared AF. Well, that's probably the best way to describe the prevailing sentiment of market actors currently. Year end, hello, Patrick, shake these EMFers out. That's right. I think that's basically what's occurring. It's a big tree shake, especially considering what bond markets are telling us. Give the guy a like, sir. David, thank you very much. 67 people in the stream, 42 likes. We've done better. Chronos Epoch, what do you think about the changes of memo and W memo? So wrap memo is cool. It incorporates the index, so you don't have rebases. You basically just have appreciative price because you're able to redeem W memo for memo. Um, and ultimately time, which is in that process is considerate of the index, and the index is constantly going up. Personally, my opinion of time, ohm, and butterfly and Lobus. It's just all red herrings. The bonds are extremely meaningful, and the treasuries are just powerful. They're just going to be basically VCs, and that's an extraordinary achievement for the crypto space. And frankly, Olympus just came out with their variable duration bonds. This is very big stuff from a systemic protocol standpoint and the momentum and directionality of the market. Do I think the asset? Uh, they're okay. I mean, if you get 50 to 100% ROI per year, that'll be good. And probably that's probably what I would expect. But that's why it's a red herring because you see 6,000%, whatever the heck ohm is at, and you think you're getting 6,000% a year. You're not going to get that. You're going to get maybe 50, 100% ROI in your capital per year. The design of the protocol is to maintain value of the position, not for appreciation or asymmetric appreciation. The only folks that made massive, massive asymmetric appreciation were the early participants, and that's okay. The assets are extraordinarily meaningful for the space. I think there's a fair amount of opportunity cost. That's the best way to describe my opinion of such assets. I think there will be a fair amount of opportunity cost. Breakless is in the house. A pleasure. David sold my time at the bottom. Was still in profit though. Was still in profit. Good, 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 good. Been chopping all along. Early entries make perfect. Basically, that's the deal. Anyone saw the Looks airdrop? Yeah, I heard about that. Was that NFT marketplace? You know, hard choices what to do with airdrops. Not that interesting though, personally. Um, Digi Lights in the house. Noah, my man. Exodus staking Cosmos, 13.75% APY. That's me, a heck of a savings account. Cosmos is just Uh, 4-year time horizon, Cosmos with the China narrative and the BSN integration vis-a-vis Iris now, that's just such a big deal. Just got to have a fair amount of time horizon with Cosmos, and I think that's going to rip 10x's across the board on the Cosmos Hub assets and everything that's on the BSN. That's just a big deal. You just got to wait for the Chinese CBDC to release, and they're releasing it. And you can have all the humanitarian concerns and the political and the controversial concerns capital controls all you want. They're releasing it, and that's what's happening. And we'll see. We'll only know in hindsight how to validate and evaluate what occurs. Good morning, Asun. Daniel, how long do you think high APRs will last? Not long at all. I expect them to be diluted aggressively as capital floods the space over the coming years, and they'll normalize around averages. I expect 2, 3, 4, 5, 10%, and some new stuff. And obviously, you still have the degeneracy and the unsustainable hyperinflationary interest rates that just destroy digital currencies. But the core, the powerful, the lasting protocols and assets in the crypto space are going to get diluted, and the interest rates are going to come down significantly. It won't last much longer. It won't be 2 years. Um, Brasieros in the house, very nice. Thoughts on butterfly? I said it earlier. Red herring. Frozen. Hey, Noah, regarding your Olympus Dow position, I don't have an Olympus Dow position. Do you see Geom as cash flow? I do not have that position, my friend. I don't think it'll appreciate more than 100% ROI on a yearly basis. I expect treasury assets to remain relatively flat. Bidders in the house, always a pleasure. You make me smile when I see your name. Fife insurance assets, I feel like it's an industry that could easily be disrupted by crypto in years. You're talking macro shit. You're talking about like Sia Coin and Filecoin disrupting Amazon or like Azure, like Microsoft Cloud Storage. Cloud storage. This shit's going to take 3, 5 years. You might as well have a 5, 10-year time horizon for disruption of large scale legacy financial constructs. Timothy, do you DCA whenever there is a correction? I do not. What I do is I liquidate, I get rid of the weakest assets, and I concentrate into the strongest assets. And maybe I'll trim a little bit, rebalance, but no major surgeries unless there's really like an obvious opportunity to buy back lower. So right now we're seeing support on curve on the 100 SMA and the daily. Like let's say you see a breach below that, you go out to the weekly. It's holding support on the TWAP, which is really nice to see. But if you go out to the monthly, the next stop down is really like the 50 SMA. I think that's the 10 SMA. Let me validate that and be precise. That is the 10 SMA in the monthly, and the TWAP is down at 283. 10 SMA in the monthly is 329. But to get down there, you're going to really need some bearish market conditions. I mean, this chart just is screaming directionally upward, especially with the support we see at this price point. We broke below. Let me show you guys what I'm talking about. If you go over to the 4-hour, you see this price point back here set April 16th of this year. You had a failed breakout, a failed breakout. So look at all the buy activity below it. They're higher lows since that price point, and this is probably look at this region right here, where it's at. There's a fair amount of price action support in the region where it's at. And if you see support here, it's not going all the way down here. That's what behaved back. That was the behavior back then. And you're seeing so much entrance, new buyers here. What you got is a cost basis reset. There's a massive churn of assets and capital generating a higher cost basis. So the only way you get down here is if the average market actor sells at a loss. Rational market actors don't sell at a loss. And this is a relatively sophisticated asset to understand, to have a position in. So you're generally talking a relatively rational um, um, set of actors involved with the curve. They're more likely than less not to sell at a significant loss. So I see a lot of price action congestion in this zone right here. So I see a meaningful cost basis reset. If we see support hold here and we see a rip to the upside, maybe we see just, well, that's not really, this would be a hell of an A leg down if we see a rip up to the midline of the fork and then a lower low and like a blow off bottom down to three something. That looks like about the price extension from up here. If you do like an ABC correction off this top up at $6.60. But we'll see. We're seeing nice support, nice wick on the 4 hour. Look at that. Let's zoom in real quick. I mean, that's a nice wick down there. It's the type of thing that's a capitulation bottom, and you have an inverted hammer brewing, 2 hours, 40 minutes left on the subsequent candle. So that'd be a nice confirmation for upside continuation, or more likely than less upside continuation. Raul's in the house. Hello, Michael K. It's criminal. There's only 70 people on such a quality stream. Really appreciate all your insight, Noah. You're welcome. I try my best. We do things differently around here, and the complexity is I'm highly technical. And I'm talking about the macro financial conditions. I'm talking about the bond market and the equities market, and we're talking about monetary policy and tokenomics always. So this is, it is what it is. But I know that a lot of people will find this useful. I find it useful for myself. The conversation we have today is not the same conversation we've had historically on the original streams. So we've grown a lot, we've learned a lot, and you guys help make me better. That's the deal. Stephen Incoomer's in the house. Damn right. Greg, thank you, Noah. I be educated now and just better and better over time. We can do better. What are your thoughts on Bankcore V3? Wonderful, wonderful technology. The team is tried, true, and tested. 2017 launch. It's a big deal. Historically, Bancor has asymmetric appreciation and then basically asymmetric decay subsequently. Whether the asset has appreciation and stickiness at the higher prices has yet to be seen. I look forward to it. I look forward to Bancor V3. I have a legacy position that's probably about 0.4% of the portfolio that I bought at like 30 cents back in early 2020, give or take. That's when we were coming out of the bear market of 2019. So, high opinion of Bancorp V3, even a higher opinion of Nate Hinman and the rest of the team. Just, whether the price action of the asset is mutually exclusive to my sentiment of the developers and the team members. It's nothing personal. This is all business. It's not personal. Raul, can you talk about Andre's new product? Which chain will be released? It'll be on Phantom. I talked about it earlier in the stream. Token distribution will be a protocol drop, no airdrop to market participants, directly to protocols, and protocols will have discretion on how to distribute it. Probably going to provide incentives for liquidity positions. Eric, hey Noah, looking to up my CVX FXS position. How concerned about FXS price action going lower significantly once the CVX FXS is live on Convex a la CRV price early on? Yeah, there's nothing comparable to a curve in the CV in the FXS forward trajectory. The tokenomics are entirely different. FXS is deflationary. There's a constant buy pressure from $1.8 billion worth of treasury that's deployed. Frax is evolving into a treasury. It's going to have overtones of Olympus in some regards. It has overtones of spell, and it's a CDP, but the treasury is deployed, and historically it's been deployed to Yearn, and it's just novel tokenomics where instead of using protocol transaction fees to purchase FXS on the open market, it uses the protocol to mint Frax, and then the Frax dollars are used to purchase FXS on the open market and burn them. So as that's extraordinary. So it's quite extraordinary tokenomics. I got to look for novel and extraordinary tokenomics, and that's what we focus on. That's why we look at Keeper, Frax. That's why we follow Andre and his new protocol. That's why we're looking at Spell. That's why we look at Convex and Curve and the synergy that occurs there. There's not many leading protocols in the space. They got some serious shit going on. They got inflation under control either by internal tokenomics or convex, what it did to Curve, by synergy. And that's the type of stuff that causes a core user base to emerge that prevents a price action that depreciates over time. You just got people that own it, that own the protocol, and they're not even looking at the price because they know the directionality of the market. The directionality of the market is upward into the next 5, 10 years. We're going to wrap up the stream in a couple minutes. AR, thoughts on Luna, FTM, ecosystem. Luna is a big deal. FTM is a big deal too. Dr. T, how are you? I hope everything's good. It's always a pleasure. Good morning from the snowy Idaho mountains. Must be beautiful. I don't know anything about snow. I got palm trees and shit, but I'm sure it's refreshing. So appreciate it. That's something I haven't seen in a while since my New York days. So I do know snow. I do know it exists. Is there a faucet for some FTM when bridging to the Phantom chain? Unknown off the top of my head. Larry, a little behind listening, early portion, VE 3x3. Keeper must sound like a different language to new participants of the space, like some alien stuff. Yeah, yes, it does. Rob K, do you think the bond market could be selling in anticipation of quantitative tightening? Well, tightening entails they're buying less, so that means there'll be a flood of means there might be depreciation. So they might be front running the Fed buying less, fearing that there'll be less buyers and there'll be more sellers, which would lead to price action imbalance, causing depreciation. So maybe the sell off in bonds is front running the tapering, that people are fearing more sellers than buyers and they're fearing future sell offs. So there's a variety of things, and that does sound like a valid sequence of events. Um, that sounds valid. They're fearing that there's going to be more sellers than buyers with the Fed not being in the market. So basically, what it means is the bond market is calling bullshit on Fed tightening and an equities market sell off. Because if there was an equities market sell off and things were toppy, people would be piling into bonds, given the forward looking nature of equity markets. Dr. T, North Idaho, my man. Yes, yes. Would you listen? Would you liken FXS to Luna, UST in terms? Yeah, that is an interesting comparison. Not necessarily the same, but an interesting comparison. I do not have targets. I have no interest in liquidating the positions. I have interest in capitalizing on protocol transaction fees and recurring revenue streams. Last question, Austin. Captain, what do you think about liquid driver? It's not on the radar for myself personally because I don't need to extend out on the risk curve, but there is a nice relationship between liquid driver and the emissions assets on the Phantom network. So it's possible things head in a comparable direction to the way what Convex did for Curve and Liquid Drivers doing for Spirit, so on and so forth, and the other assets. And I've yet to see what is going to emerge with Tokamak. I just personally I don't need to go out on the risk curve anymore. So it's obviously a luxury. Then I'm going to take advantage of it and I'm going to concentrate. I'm going to sell the losers. I'm going to add to the winners. And at the end of this, I'm going to probably have three main assets in the portfolio, which is exactly what I have at this point. And over time, I will have less and less assets, part of the 1% to 10% group that I talk about often to you guys. Um, all right, let's wrap it up. Monday, January 10th at 12:25 p.m. As always, I thank everyone for joining me. After party on Discord, we got the crew. It's bigger and badder than ever. Everyone is the most rational in the crypto space. Frankly, it's a spectacular environment to keep your FOMO, your irrational exuberance under control, and do the right thing and do better. So that's something I'm proud of, that we've been able to accumulate such an incredible group of people. I cleaned up my Ask Vids this morning. So if you have any ideas or questions, I'm more than happy to help the best I can. I don't think I have any questions outstanding. So it sounds good. Monday, let's wrap it up. I'll see you guys on Wednesday. I wish you all a good day, and I'll be on Twitter as usual. Catch you then. Peace.